Good afternoon, everyone. I'm Aniket Chatterjee, and this is another video on where I'm gonna share my plan, the first $1 billion. I know this amount might sound something so ridiculous, like if you're supposed to be a billionaire, you're supposed to get into tech, you're supposed to be building a business in technology, in AI, data centers. You fucking scale it till it brings in like a million customers, and then we can think of a valuation where we can reach $1 billion. But as you may know, I'm studying my MBBS and I'm just gonna be a doctor. Sure, I'm definitely gonna have many businesses in the hospital industry in the future, but for now, $1 billion. You might be asking how, Aniket. So this video is just gonna be me describing on the things that you need to be a billionaire. The first and the most important thing, like you cannot take this out of the equation, and that's time. I am 20 years old. My plan isn't to be a billionaire tomorrow, in the next 5 years, even in the next decade. My plan is to be a billionaire by the time I'm 60, by the time I'm 70. Because I know for a fact I eat well, I work out every day, I do not consume alcohol, or I do not smoke. I make sure that I do everything that is in my control to live a life till I'm 100. So I know for a fact if I'm a billionaire, by the time I'm 60, by the time I'm 70, I have 40 years to enjoy my life as a billionaire. My life just starts at the end of 60. So now that we got that out of the way, you might be asking, why time? What's so special in time that you say that you're going to be a billionaire? So time is equivalent to compounding. Compounding is the eighth wonder of the world according to Albert Einstein. And as you may know, he has definitely above average IQ. Now the reason he said that is because as and when we give our money invested to compound, what happens is there's a point where the amount that you had invested, it has generated certain profits, and that profit is further making profits on that profit. If that does not make sense, please search up any video on YouTube on the basics of compounding and your mind would be blown. I can assure you that. So as we know, the time and compounding go hand in hand. So the first thing and the most basic thing that you need is at least you need to be young. I'm sorry to say, if you're 40, if you're 50, and if you're thinking of being a billionaire right now, it's just too late. I mean, you don't even need to be a billionaire actually. You just need to have sufficient amount to enjoy life. A billionaire is just my ambition because I do whatever I want to. Because if I'm alive, if I'm in this world, why not be a billionaire? That's just my ideology. So now that we know that I have time in my hand, I am young, I'm gonna compound my wealth. So what is the plan? What is the framework? So according to my framework, I have 4 subunits. The first subunit is active income. If you do not have an active income, if you think that you're just gonna passively make $1 billion, you're the biggest fool in this world. You need to have an active income and you need to make shit ton of money in that active income. You cannot be saying that, okay, I'll have an average active income, I'll turn patties in Wendy's, or I'll work in McDonald's and I'll be a fucking billionaire. No, you won't. I'm a doctor. I'm gonna give my USMLE. I'm gonna be a cardiologist in the US. I'm gonna aim for a salary above 500,000 a year, and that's gonna be my active income. I'm gonna invest a substantial amount of that money every month, and by substantial I mean above 50%. I'm gonna live frugally. I'm gonna invest more. So that amount after 20-30 years would be insane. I'm gonna give you an exact figure of the amount that I'd be investing, the amount it will become, everything of that sort. But for now, just bear with me. Now that we know that you need to have an active income, be the best in what you do. That's why you sure need to do college. Or if you want to do something that does not require college, I think freelancing is pretty good. You can open a business. It has risk, but you need to have a cash intensive business. Now that we know that you need to have an active income, by the way, which I forgot to say, after I become a cardiologist and I'm earning that, 500k isn't enough for me. I'm going to do consultation and I'm going to work part time as well. Any opportunity that I get. That's how I'm just aiming to make the most out of my active income. My aim would definitely be to reach $1 million per annum in active income. Now, the next thing that you can do is have passive income. Now, passive income is stupid, first of all. There's no such thing as not working and making money. You need to work, you need to be smart, you need to use your brains. Without that, you can't be making money. So, what can my passive income be? It's going to be real estate. I'm going to list it on Airbnb. I'm going to get my rent. I'm going to have the value of property increase over time. So that's just going to be on my asset column, which I'll come back to later. So I'm getting my rent from my Airbnbs. I'm going to have my social media income. I can be doing consulting. I can be teaching people on the investment strategies that I do when I reach 100 crores. You're reaching a very young stage of me. So congratulations on that. That's going to be my income. And I'm going to have other business ventures for sure. But that's going to be when I'm 45, 50. I might probably open a hospital chain. So that's just my goal for passive income. Now that I have my active and my passive income, the next thing that I'm looking at is the assets that I need to invest in. Now, when we're talking about compound interest, the most important thing is the efficiency with which you are compounding your wealth. I've devised a plan which gets me at least above 15% CAGR a year, compounded. That's all I need. That's all anyone needs. You might be seeing people doubling their money in trading. You might be thinking to yourself, oh, that's the best thing to do. But let me tell you this. If you are successful in compounding your wealth above 15% for 40, 50 fucking years, you're gonna reach $1 billion. Warren Buffett has compounded his wealth at 20% CAGR. He became a billionaire at the age of 60 and he's standing at $130 billion at the age of 92. So you gotta think to yourself, why did that happen? Why did he make 99% of his wealth after 60 and he reached at $1 billion at the age of 60? A person who has accumulated a wealth of $130 billion was not a billionaire when he was 59. That's some food for thought. So how do you compound your wealth that CAGR? Simple. Do not use your brains. Do not pick stocks. Stocks are very short term. Any company can be overturned within the next 10 to 20 years. No one knows what's gonna happen. So what you need to do is buy a basket of companies which can be very well safeguarded in indexes. Simple index investing. That's it. Do not use your brains. Do not try to be smart. You cannot beat the market over the long run. You might be beating it in 1 year or 2 fucking years of bull run and that's it. You're gonna get screwed if you try to keep beating the market. And you're giving too much time towards that as well. I mean, why do you need to use your brain that much? Just make more money in the active income stream. Make more passive income streams. Why are you thinking so much to pick that one stock to maybe make a 0.5% alpha on 15% or whatever? Why think that much? So the basic assets that I'm planning on having is my equity portfolio would be definitely a huge chunk of my money, because I know for a fact that I'm going to hold it for the long run, so I'm not worried about the volatility that we see in an equity portfolio. In the end, before I retire, I'm going to get into debt, but that's a different story. Now, if you want to know the planning that I have made for my equity portfolio, I'm going to make another video on that because this is just going to take too much time if I try to cover it in this video. I'm going to have my equity portfolio that's a substantial amount. The other money would be in gold and real estate because I love real properties. I love properties basically. So it's just going to be my passion. 10 to 15% in real estate. That's it. I'm going to make my passive income. I'm going to get a rental yield from that, so I don't mind. See, that's a pretty personal choice. This is my plan. You can make any plan, but you need to make sure that you're compounding your wealth at 15% CAGR. Anything above 12% is pretty good. below 12%, you're going sub part of the index fund. So you need to really question yourself what you're doing. So now that we know that how I'm going to compound my wealth, the last and the best, the most fun part for me is the fourth subunit that I was talking about, trading. Now I know it might be, it's a very subjective thing for me. I would not recommend anyone to get into trading because you're definitely going to lose a lot of money. I've lost a lot of money, but my parents are well to do and they're doing pretty well. So I did not have to face too much economical turmoil. Otherwise, I might have to come to the streets. My college fees costs 5,000 rupees. Yes, that's my medical fees. So I haven't given them too much economic burden to care about the money that I lost. But you're going to lose all of your money, that's for sure. So trading is something that you need to be mentally and economically capable of handling the losses. But once you get over those losses, and once you figure out a way to actually make money from it, be profitable in it, trading is the way. I'm going to basically do option selling. I'm going to use about 10 to 20 crores. I'm going to option sell. I'm going to make 4% a month. You might be calculating it, it's 28% a year, but I'm not going to compound it. That's going to be cash flow for my personal day-to-day use. 28%, that's good enough for me. As you may know, that's 2.8 CRs a year, and I'm pretty okay with it. Eventually I might increase the funds, who knows. I've also thought about opening a hedge fund, but I mean, it's all pretty hazy right now. I'm working on it. But as you may have followed, there are 4 subunits to my plan. I would go over them again. The first one is making an active income. If you do not have an active income, if you are not making money through a job or through something safe, if you're not sure that this amount of exact money is going to be in your bank account the next month, you lost right there. Active income, most important. Second thing, we build a passive income. That's a pretty personalized thing. You can do freelancing, you can do different businesses, you can do social media. In today's world, you just need to pick up a phone and make a video, and through a button you're reaching thousands of millions of people. So in such a beautiful stage of this world, why would you not use those kind of opportunities and make money? Real estate, but that's a capital intensive thing, so maybe eventually people should start, and that's how you make your passive income. The third subunit is assets. You need to make sure that you're compounding your assets. This is where the true work is going on. You're compounding your wealth, whatever money you're making. 50%, or that's up to you. People usually talk about investing 30%. I'm more of an aggressive investor. I'm going to invest above 50% of my money that I'm making into my assets, and I'm going to compound them at a 15% CAGR for the next 40-50 years. And finally, trading, which has been the love of my life. So I'm going to option sell. I'm going to be the most safe player out there in the world. I'm going to aim anything between 2 to 4%, and I'm good. 28% CAGR per year, but not compounded. Just keep the capital same, and I'll just keep making 28%. That's just for personal use, or maybe I might invest it, who knows. So you get my point, right? You need to be having 2 key components. One is cash flow and another is assets. Now the cash flow is for daily use, assets are for compounding your wealth. That is where the $1 billion is going to be made. This right here, you need cash flow to survive, to live a life, to live well. So that is why I'm emphasizing on the active income part. That's pretty much it. For more details, I might make different videos on these, and see you guys. Take care.